Q1 payrolls confirm this trend in the US economy, do you think?
I think that's certainly the expectation that's embedded in markets, and we get some final clues, of course, from the ADP report today, and market generally expecting a figure in line with the recent trend of about 200,000 or so job gains per month. Barring any big surprises in the higher frequency indicators, we kind of agree with that. So I think cementing the view that the recovery is solid, if unspectacular.
So where does dollar yen go now? Are we heading back up to 105?
I think we can probably grind a little higher from here. Our concern on dollar yen is primarily that the market is very heavily positioned already. All the half dozen or so indicators we look at for guidance on market positioning, they're pretty much all signalling that the market is well subscribed to the dollar yen higher move, and for that reason I think the way we trade from here is a grind higher but a growing risk of a very material correction lower. So yes, we can grind higher, but I think it's hard work, and the risk of a positioning led correction is getting quite substantial.
But is there anyone out there not playing the short yen trade right now?
I don't think so, I think that's the worry, that if you look at asset managers' returns relative to dollar yen, correlation is incredibly high. The IMM positioning data again signaling that the CTA sector is very, very short of yen, and that I think is the danger, and that's why it's a bit of a struggle to make much headroom from here, is that simply the market is very heavily bought into that consensus view.
Where's the euro going? I mean, clearly it's being held down a little bit by the latest inflation numbers, expectations of what the ECB is going to do. What do you think the ECB is going to do?
Very little, and what I think they won't do is mention any specific concern on the currency again, which is something they haven't done since February in any kind of meaningful way. And our view is that the near-term risk is still to the top side for the euro, partly because we think that the risk premia in the euro are still compressing, and that trend is ongoing as peripheral spreads come in and markets generally take out the premium the euro carries, and equally because we think that the dollar bullish, again very strong consensus view, is going to struggle to find much traction in the near term.